I have a question for you. When you change these assumptions on the original proposal, can you give us a sense for which ones really made a difference, or what's the relative impact of each of these assumptions? So which ones really are the most important ones in driving your adjustment?
It's cumulative. So, for example, the townhouses are only 7. So it wouldn't have as big an impact as the adjustments to like condominium sale prices. They're more condominium, so that's going to have a greater adjustment. And it also takes into account the difference of that adjustment.
But there isn't one that drives 50% of the impact or anything like that. They're just all little bits and pieces.
I think the sale price that's a substantial bit.
This impact.
Yeah. So that's more than the parking, it's more than the rental rate for the retail because it's a smaller number of square feet. But cumulatively, it just brings down that net operating income. And then when you increase the expenses, that also has the opposite effect of also feeding the net operating income. So that's too much impact. And then the vacancy rate, because we increase that, that also has an impact. So all of the changes end up having essentially a negative impact.
You had mentioned that you were concerned the absorption rate might be slower than developers model. And as part of the basis for that, you quoted a number of 291 units actually being absorbed. What is that?
In a year, average, based on the feedback that we received from the market, historically about 291 units have been rented each year. Right, so
in what zone?
For buildings that are located in the downtown. So we looked at the buildings, not where the people are coming from. Right, so if you look at the buildings that are rented and have available rental spaces, and any new buildings that come on, 291 units are rented net each year. You know, some people come in, some people go out, but it's been a net. So,
but I mean, right now, that's just downtown, though. Is that what you're saying? It's not like east side or.
It's the downtown Providence area.
Do you think that's relevant to? I mean, there are very few units built downtown.
There are. Yeah. So once there are 2,000 new units in the pipeline. Okay, so this is what, 1/5 of that, and they're not all going to come on at the same time. So we didn't change an assumption related to absorption, but we think it's important to understand that it might take longer for this building to rent than 1 year, which impacts the bottom line. And, you know, when you have to pay your debt, when you have all the expenses to pay for.
So
it's
sorry,
just a risk.
That didn't change your return on cost?
No, it didn't. It's just, we just wanted to identify additional risk that should be taken into account when looking at the property. To absorb all those units, it's like 33 units a month. That's aggressive. If the market changes and people from Boston start coming here, and often because there are more units in a market, you attract more people. So there's that dynamic too that could happen. Historically, it hasn't happened yet, but it could. But it's a risk, and so we just wanted to point that out.
So Patty, apropos of that, it'll take a year or so to get the various approvals if everything goes through, and then another probably 2 years to build. So the crystal ball really needs to go out 3, maybe even 4 years. And a lot of things can change in that time period. Hopefully they're all positive and the fan organization's numbers prove out or even better, but they may not. I guess that's what you're really pointing out to us based on today's conditions.
Right. Our job is to provide another benchmark and look at the market and say, based on the market, what could also happen. I mean, you know, developers, feds are always optimistic because they believe in their projects.
Right.
That's okay, but if I were an investor or I were a bank, I would be looking at it like this. I'd say, well, what's happening in the market? It's the other side of it. You have to take a conservative approach in the sense of understanding what your risks are. So if I'm going to invest in a project, I want to know what my risks are. And they can be changed.
One follow-up. So to be clear, the financing gap is in addition to the subsidy that was mentioned.
No,
No.
it includes it.
It includes it, okay.
Right.
And to the extent that the financing gap exceeded that subsidy, you know, that it would require additional, presumably, equity capital because the bankers
Right.
probably wouldn't be funding that.
Exactly. Right. I'm not saying that the city would provide it. I'm saying that it would have to be taken into account, just as you said, in terms of the financing. So if you're going to put in more equity.
Sponsor or other investments.
Yep. And if you do put in more equity, you're going to get a lower return because you're putting in more. But that's up to the investors.